Hello traders everyone, my name is Grega and welcome to our new video. I will this time talk about some educational stuff. I will look at the ending diagonals that recent unfolded on dollar Swiss franc, and I will also touch gold because of the correlations. So back in at the end of October, at the start of November, we have seen US dollar moving sharply across the board. The sentiment has been very bullish, the US dollar, but then we have seen recently that US inflation came down a bit, and there was a new speculation that maybe Fed will stop with their aggressive hawkish look, while on the other hand we have the other central banks that will still continue with the hawkish look to achieve the same goal, so that inflation prices in general will come to the downside. So it's not a surprise that US dollar has seen a very sharp sell-off, while the US yields also came to the downside. But this type of patterns, very sharp moves that recently occurred, can be very helpful, or we may try to recognize the upcoming moves if we have the right tools. And one of the tools, of course, is the Elliott wave principle. The Elliott wave principle describes how the group of people behave, and normally this type of patterns are recognizable. And if you can recognize the current piece within the higher degree picture, then you know what to expect next. So here I'm looking at dollar Swiss franc. I'm looking at the ending diagonal. So what is an ending diagonal on the first place? Well, an ending diagonal, it's a 5-wave pattern that occurs at the end of the trend, at the end of the bull market, or at the end of a bear market. And normally what you will see is that price will still keep rising, but normally on a very low volume and very low momentum. Okay, and this is recognizable through the price action, because you will typically see that wave 4 will trade into the territory of a wave 1 or wave 2. And when you see this kind of overlaps in uptrend, then usually this means that, well, that the bulls are not that strong anymore. But still, traders will try to buy the market because it's an uptrend. Okay, but usually when the price action becomes a little bit more choppy and overlapping like this, and not that impulsive anymore, you will see the bulls bear to fight in both directions. So what will typically happen is that traders will try to ignore the potential reversal, or even will step out of this market. But usually when that's the case, well, as you know, the opposite occurs. So when volume and momentum are becoming very low in bull market, but still in uptrend, that's usually an important sign that market is ready to top or even reverse significantly on to the other side. Normally you will see that RSI will form very important divergence when you have this type of a price action, called also not just an ending diagonal but also wedge. So if you're familiar just with the basic technical analysis, that's something that we have considered. It's a wedge pattern, and usually when the break on the opposite side occurs, you will typically see a very sharp reaction, very sharp move. And normally when this breakout occurs, what you will see, that price will retrace all the way back to the starting point of the pattern, which is here at the start of wave 1, obviously. So we want to look now on dollar Swiss. We were able to discover this type of a pattern back at the start of November, and we noted that when this trend line of waves 2 and waves 4 is broken, that's usually the first confirmation the top has been formed. And then you have another confirmation, it's the former wave 4 swing low. When this one is broken, you have another confirmation that market should continue lower. That's why we labeled 2 circles here, the potential breakout points. So what happened afterwards, of course, after these trend lines and bearish levels were broken, we were looking for a retracement all the way back to the starting point here. And a few weeks later, you can see that price reversed all the way back to 93.70, which is exactly here the starting point of this pattern. So normally, not normally, but obviously, there were some important orders down there that were now possibly filled, and that's why we have seen a reversal higher. But now the question is, what may happen from here? Well, it's again very important to focus on the price action in general. So I said earlier that because the price action was slow and even overlapping here, okay, between wave 1 and wave 4, we said that based on this personality, we were looking for potential reversal in the trend from bullish to the bearish mode. But now you can see that the current drop is not slow like the previous rise with these overlaps, with this wedge shape. In fact, it's a very strong drop. It's a very clear impulsive wave. That's a 5-wave pattern, okay? It's called an impulse, which shows the direction of the current trend. So where is the direction? Well, the direction is clearly to the downside for me, as long the market is trading below that high here. So I will continue to look for more weakness, but we know that after every 5 waves, market will typically make a 3-wave retracement. So watch out for this ABC retracement that, in my opinion, is now underway, and usually you will see that this counter-trend movement will retrace for at least 38.2%. The ideal resistance would be between 50 and 61, where you also have these former swing lows that could act as a very nice resistance, because there was obviously the very important, very strong breakdown. So if we focus now on the same levels, then obviously this should turn into a resistance zone now. So watch out for maybe more upside strength here in the near future, but then I eventually think that dollar Swiss could come under pressure, because I said the most important was the ending diagonal, a potential top formation, and then more importantly even a 5-wave drop. So if we are bearish on dollar Swiss and even just temporary, and we expect more downside after current recovery, the question is, what may gold do? Well, if we think that dollar Swiss will continue lower, then I think that gold will move to the upside after the pullback. Why? Because you can see that Swiss franc, okay, and gold are positively correlated. So if Swiss franc, okay, will move higher, the gold will follow. In other words, if dollar Swiss will drop, the gold will rise. If dollar Swiss franc pair will rise, the gold will most likely move to the downside. You can clearly see that there were very timely reversals on those markets. So in my opinion, because of a very clear, very strong pattern that we recognize on dollar Swiss, I think that gold may continue lower after the higher after the 3-wave rally will be completed on dollar versus Swiss franc. So I want to look at the gold wave counts, and what is very important for me is that here we have seen quite aggressive reversal here in the last few weeks. Notice that gold was able to find the support at this upper trend line of this base channel, okay, and normally this trend line of this base channel will provide the support or even low of a wave 4, especially when you have the previous trend line, the same trend line broken, that confirms that this is the 3rd wave. So in my opinion, we are at a very interesting support here for gold, especially if we also consider that the 10-year US yields have potentially 5-wave movement here, meaning that 5-wave rally could cause a minimum 3-wave reversal. And if that would be the case, this again would be bearish for dollar and obviously bullish for gold. So I think that gold here has a very nice chance for potential more upside while we are holding this support line. The next trend line that we should focus on would be the middle line. But the bearish case would be if the lower trend line of this base channel would be broken. That would be a game changer then. But for now, as long as we are above these 2 trend lines, I think that there is chance for more upside. Also, let's take a look at some of the COT data. As you know, large speculators, those are very, very important. and recently we have seen a very nice readings here on this data compared to the past cycles. Notice that always when large speculators, not always, but recently when large speculators were heavily short, the market later on rallied, at least for a temporary time. It occurred here back in 2013. Then even more importantly, it was in 2015 through 2016, then again in 2018, and now notice where the recent readings was, very close to the past readings. So again, this made a quite interesting potential bullish case for gold if we consider that this sentiment could be changing now. So based on the Elliott wave terms, based on the US yields, based on dollar Swiss, based on the simple wave structure on gold itself, I think that there is a chance that gold will actually move to the upside. But of course, sometimes it's very tricky to say that if we are going straight up from here or after another new low, intraday low. But it's very important to understand that this is more like a cyclical approach. So in my opinion, on gold, we could see higher prices in 2023. Now, if you like this analysis, please press a like on the YouTube channel or leave me a commentary below. Keep in mind, it's also Black Friday is coming, so we already have some special offer for the Elliott Wave educational videos. So if you are interested in more stuff like an ending diagonals and other details about the patterns in Elliott Waves, keep an eye on this offer. It's valid for a limited time now. You have 70% off on this Elliott Wave theory course. Okay, so I will cover a lot of basics in this educational videos, even share some examples and trade ideas that we shared in the past, okay, based on the patterns and the Elliott wave structures. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you next time. Bye.